Every single Wednesday, 4:30 p.m. Central Standard Time, we're coming at you with Want to Know Wednesday. Please subscribe, leave a comment, let us know, ask us a question, let us know what you want to know, and next week your question might be featured on Want to Know Wednesday. So I'm just going through some of the questions that we got, and the question that I felt was pertinent for today to answer was, can you make a quick video on why the stock market downfall and media doesn't scare you financially for investing? Appreciate the comment, by the way. Appreciate you watching the videos. For me, I've got zero in the stock market. I haven't had anything in the stock market in like 12 years. 12 years ago when I did have something in the stock market was when I was in college, kind of just messing around, and I'd have a Scottrade or E-Trade, some type of account, and I would mess around. I made a little bit of money. I would read the Wall Street Journal and try to pick the right stocks, right? I also had an IRA that I liquidated at one point, and that money went into, with some of the money that I put into our first apartment building. So what I realized very early on when I had that E-Trade, Scottrade, whatever type of account it was, and trading my own stocks, reading the Wall Street Journal, whatever, I realized real fast that it was gambling. I felt like it was, Friday night poker night with the college buddies, feeling like I was just, based on whatever card that the dealer flipped, that was going to determine my hand. That's what I felt like the stock market was. I read all these books about Warren Buffett and Berkshire Hathaway and Charlie Munger and all these other great stock selectors, stock pickers, stock market players. And the difference between them and me and them and you is that they buy in such large quantities that they can actually have an impact over these companies. And so if I can ever get to that point where I can write a $200 million check or a $1 billion check or a $5 billion check into one of these companies that I think is very undervalued and then have some say in what's going on there and control, I don't view that as gambling as much, and that's something that might happen one day. If I'm only able to put in $100,000 or $5,000 or $2,000 or $1 million or even $10 million or even $25 million, it's not something I want to do, because at that point it's like roulette. Just like what we're seeing within the stock market right now, right? We're sitting around 29,000 on the Dow, and it's trending down, right? That's not your fault if you invested there from the standpoint of, you don't have actual control. It's not your fault that the company made bad decisions. It's not your fault that the Fed decides to raise interest rates. It's not your fault. The one thing that is your fault is deciding to put money in there at the wrong times. Now, if you're investing over the long term and you put $100, $300, $500, $10,000 in each month, and you're just going to let it ride for 30 years, and you do that every single day or every single month consistently so you don't miss the highs, hey, great. Too many of you are putting in money when it just feels good because there's good vibrations in the air and everything's kosher, and then all of a sudden the next day it tanks, and then you pull your money out. That's the worst thing that you can do. And so for me, I don't get caught up in it. I don't spend too much time watching or listening to media. I listen to Fox Business and CNBC for maybe 10 or 15 minutes on the ride in to work, and maybe for 10 to 15 minutes on the ride home from work. That's about it. There's a couple nights a month that maybe I'll turn on Fox News or Fox Business and watch. Probably consume less than 2 hours a month of TV media talking about that stuff. Obviously, every day on the radio, listening to a little bit of stuff here and there. I pay attention, and I want to know what's going on in the world, right? So I do read the Wall Street Journal. But I'm not going to sit here and freak out, because 90% of my wealth is in real estate, and then of that, right, we've only got 3 or 4 properties that have variable rate loans because they were value add deals. We wanted to get in, be able to pull the value out, go refinance or sell without prepayment penalties, right? So those couple deals give me a couple headaches and a little bit of angst. And of those 4 deals, it's really only 1 or 2 deals that give me that angst. All in all, long term, I'm going to be fine in real estate. Our properties are cash flowing. We're still paying distributions. Last month, we paid out, just in regular monthly distributions, we paid out $440,000 to our investors. We're going to pay out over $5 million, $6 million this year in regular distributions, monthly distributions to our investors. And that's because the properties, they're always going to have, they're a hard asset, right? We own this wood right here. This drywall right here is ours. We own it. We got people renting from us. We got cash flow coming in to cover the expenses. We got cash flow coming in to cover the inflation. We got cash flow coming in to cover the debt. We got cash flow coming in, and after all those things are paid, there's cash flow left over each month that are paying me and our investors, right? On top of that, $5 to $6 million of regular monthly distributions, we're going to send back this year about another $4 to $6 million, kind of depending how the end of the year plays out here yet. With as we head into the last quarter, we're going to have another $4 million or so that go back to investors from refinancing deals. So it's capital returned, right? So now on top of the $5-6 million of regular monthly distributions, we've got another $4 to $6 million that are going to go back as capital, return checks from their initial capital of the investment from us refinancing and getting out of deals. The only thing that has given me angst is some of those value add deals that we did variable rate financing. One of the deals that we did variable rate financing was in May, the 372 unit that we bought. But there we already saw rates were going to go up, right? And so when we closed day one, our interest rate was like 2.98 or 3.02 or something like that. And now obviously it's trending up towards 4.5, 5, but we underwrote it at a 6% interest rate. And we're seeing 20% to 55% rent increases going on, lease trade-outs going on at that property. So I'm not concerned about that property. Property that we closed about 4 weeks ago was 460 units. That's all fixed debt for 10 years. We don't have a variable interest rate. We're fixed at 4.6%. And again, we're seeing rent increases there. It's cash flow positive. I don't have anything to lose sleep over on that deal. Deal that we bought in January, a little 48 unit deal. That was a variable rate deal. That one gives me a little bit of uneasiness because variable rate, right? But we're adding a lot of value. Rents are going to be, going up. We're going to be able to refinance out. Deal that we closed January 2021, that was a variable rate deal. From January 2021, we operated it really well. August of this year, we refinanced out into a 10-year loan. So we took cash out, refinanced in a 10-year fixed loan. Don't lose any sleep over that deal. It's just cranking. It's cranking away, and it doesn't matter what is going to happen with the stock market. At some point, might we have to cut distributions if things get really bad and people start losing their jobs? Yeah, maybe for 2 months or 5 months or a year and a half or 2 years, maybe we have to lower our distributions, but we're still going to be able to operate the property. We're still going to be able to take care of the property. We're still going to be able to pay down debt. Another deal, December 2021, we closed. That one is a variable rate. That one I started to lose a little bit of sleep over, right? We've had some big time trade outs. Now we're to the position where it's only a 56 unit property. We're going to be able to refinance there in about 45 to 60 days, potentially pull some money out. And again, lock it, get a rate lock, and have a fixed loan for the next 3 to 10 years. The other deal that I do lose a little bit of sleep over that's giving me angst, we've got $50,000 a month increases in our interest because it's variable rate. We closed last, July 2021. And that one, we haven't, we've been lagging a little bit where rent should be. We're now trending in the right direction. You can see it on the charts start to take off. But we're starting to look to, okay, can we refinance this one to get out of the variable rate? But for sure, over the next 3 to 5 months, we definitely want to get out of that one, get back over to variable rate. And once we do that, I'm even going to lose less sleep than I already lose. I really, when you get out of the stock market and stop gambling, or if you're in the stock market, and like I said before, if you can just put in $10 every single day, or $300 every single month, or $500 every single month, and just freaking stop looking at the TV and just keep. This is when you need to keep investing, by the way. Everyone was so excited when the Dow was at 38, 36, 39, 40, 38, 1,000 points, right? And they were just investing like crazy, thinking that that's never going to end. And then all of a sudden when it crashes, people want to pull their money out. Don't pull your money out. Right now you should put more money in. But put money in that you can afford to just sit on for 5, 10, 15, 20 years. Better yet, get your money out of the stock market, start a small business. Go put it towards personal growth events or education that you can then take to then increase your earnings. Once you increase your earnings, save that. Don't go spend it on some stupid BS. Save it and then go invest it. That's why I don't really lose any sleep over this. That's why I'm actually bigger pockets had this stupid ass post the other day. I'm going to show you right now. It just pisses me off. Let me find it. Bigger pockets. Is that what they're called, right? Bigger pockets. When the Fed raised interest rates again, right? And it shows this football coach, the old Miami quarterback, the offensive coordinator, freaking out. The caption that Bigger Pockets had was, when the Fed raised interest rates again. And you got people freaking out, right? Am I a little upset because of some of the variable rate? Yeah, okay. I'm not like that, and I'm not showing a mad face. I'm like, dude, this is when opportunity, like if you're a real estate channel, Bigger Pockets, like you should be saying, hey, look, everybody, there's tremendous opportunity coming. Because I'm feeling it right now. There's tremendous opportunity coming where there's going to be no money down seller financing deals coming around the corner again. There's going to be deals that you're going to be able to buy for 10 or 15%, 20%, 25% less than what you were going to buy them for 6 months ago, 8 months ago. You're going to be able to buy cash flow again, more cash flow than what you could buy before. So I'm excited. Not only am I not losing sleep, I'm excited about what's going on because there's gonna be opportunity out there. Seller expectations are gonna change. People who need out or want out right now because of their age or certain circumstances, things have changed a little bit. If they need out, pricing is going to change a little bit. There's going to be opportunity. It's not going to be mass chaos like 07, 08, 09, in my opinion. It's not going to be like the Great Depression that's coming in like 2030, in my opinion. The rest of 2022 and 2023 is going to be shaky enough where there's going to be opportunities again. There's going to be, and you know what? You should be excited because there's actually going to be, because there's people freaking out like bigger pockets trying to freak people out. There's also going to be less people out there looking and trying to buy deals, right? So you have less competition with people that need to sell. With higher interest rates, there's going to be some pricing adjustment. There's going to be opportunity. If you can have a long-term mindset, get over the 6 months, get over the two-year, get over the 4-year outlook, and start thinking about, the wealthiest people on earth, they're thinking about 200 years out. They're thinking 150 years out. They're thinking 100 years out. They're not thinking about Mark Zuckerberg. People are like, Mark Zuckerberg's net worth's down $14 billion. Mark doesn't care. Mark doesn't care. Mark's thinking about how he can still freaking change the world. How he can take everybody to be, wearing goggles and, living in this virtual world. He doesn't care his net worth went down $14 billion because he's not looking at 2022, 2023, 2024. That dude's looking at 2045 with his products in his company, 2055 for his products and company, and his personal worth, the dude's looking out 100, 250 years. So get over what's going on immediately right now. Have an idea what's going on. Obviously, there's certain things that you might have to do to take action on to shore up right now. And you need to do those things and be responsible. Man, stop letting the sky fall on you. Stop letting other people put the coverage over your eyes. Stop letting people fool you. Stop letting COVID, it's COVID. And then you watch the news, it's COVID, it's COVID. I stopped believing the COVID stuff 2 months after it started. People are like, you're going to need to get vaccinated because you're going to have to show that card forever. Who's still asking for a vaccination card? I didn't get vaccinated. No one's asked me for Were there places I couldn't go for a little while because I wasn't? Yeah, there was a couple comedy clubs that I missed out on because I didn't have my vax card, my friends did. But stop letting people fool you. COVID, stop letting people fool you with all the BS political BS in this world. Stop letting the world fool you. Stop letting the media fool you on the day-to-day trading and the Dow. Grow your mindset and have a longer-term mindset. Think 5 generations down the road. That all of a sudden makes the Dow going from 39,000 to 29,000 in a handful of months to be just an insignificant blip. But everyone wants to get so caught up in what CNN and Fox Business and MSNBC and CNBC and Jim Cramer and Bigger Pockets has to say. Stop it. There's opportunity. The opportunity of a lifetime comes around in front of you once a week. And y'all are missing it because you're letting other people pull covers over your eyes. That's it. That's all I got to say about that.